RBI has acted tough as it dashed Rana Kapoor's hopes for an extension as the MD and CEO of Yes Bank. Now, Kapoor will now have to step down from the role as of January 2019 when his term comes to an end. The banking regulator has asked the private lender to find a successor in the interim period. Now, the development finally ends all speculations whether Rana, who is also a promoter at the bank, will get an extension or not. The bank's board will now meet on September 26th. That is coming Tuesday to chart out further course of action. In fact, my colleague Poonam Sahni as well is waiting by to tell us exactly how the street Poonam is viewing Rana's exit and what does it really mean for the future of Yes Bank.
Well, at least in the near term, we could see Yes Bank coming under Yes Bank stock rather coming under considerable pressure in trade. In fact, most of the brokerages have gone ahead and cut the target price multiples for Yes Bank. And yes, of course, the key risk has now been played out in Yes Bank. But it's very important to know what has led to RBI's reluctance to enhance the tenure of Rana Kapoor's as an MD and CEO. In fact, we of course need clarity on that aspect, but one aspect could be the fact that Yes Bank did post the highest divergence amongst the peers at slightly over 6,000 odd crore. It does have Q1 stressed assets at 1.5%, but it has also been one of the fastest growing banks within the entire private banking space, and that could also mean that there is a possibility of slightly further cleanup in terms of asset quality. This could be a possibility. It will also become fairly difficult for Yes Bank now to raise capital in the very near to medium term, because it does have the lowest tier 1 ratio of slightly around 9.5% within the private sector banking peers, and that could also mean slower growth for Yes Bank. Focus of course would now be shifting to the September 25th meet by the board in order to decide the further plan of action. They do have a fairly strong, fairly decent strong second line of management there. The successor could be an internal candidate or could also be an external candidate, but having said that, Mr. Rana Kapoor has been the key man since the inception of Yes Bank, and yes, hence as a result of that, the future growth strategy, the growth outlook would be fairly important to note. The stock of course could come under considerable pressure in trade on Friday itself, and in fact brokerages like be it Citibank, be it Edelweiss, be it IDFC have gone ahead and cut the target price. I do very clearly recall it was the UBS analyst who had put a sell rating on Yes Bank, and he continued to put a sell rating on Yes Bank since past 3 years itself, and I guess that risk of asset quality has certainly possibly played out on Yes Bank. The stock could be under considerable pressure, and it also means that RBI is now going fairly tough in terms of the overall banking sector and is in a no-nonsense mode, I guess, and hence banking sector could possibly brace for more changes out there in terms of a firm hand from RBI.
Okay, Poonam, we'll leave it at that. Yes, there is going to be near-term pressure in the stock come tomorrow's trade. Today being trading off, but I guess a lot depends on who the next successor is, and more importantly, something which the market may never really find out: why exactly did the RBI have a problem with the extension of Rana Kapoor's role as the MD and CEO? Is it going to be an internal candidate? Is it going to be an outside candidate? And whether or not Rana Kapoor extends in a role as a chairman, or for that matter even a whole-time director on the board, through which he could very well regulate what the bank actually is doing. But that aside, our managing editor Nikunj Dalmia also caught up with a whole host of experts to really understand what does Rana Kapoor's exit mean for Yes Bank and what really is the way forward.
The fact is that the RBI, even when they gave the extension last time, they had said till further notice. So to that extent, it's good that the uncertainty is ended, because now we know that effective 31st of January, Rana Kapoor will no longer be the CEO. So the uncertainty which markets dislike intensely, much more than anything else, that is ended. And as far as the RBI giving any reasons, you know, the regulator always appoints somebody whom they call fit and proper. Even in the matter of giving bank licenses, they go by the aspect of fit and proper, and they never elaborate what they mean by that. So while markets can speculate, people can speculate, one really will never know what was the reason why RBI took this step. Having said that, I think it's very important, particularly in the financial sector, to ensure that no CEO continues beyond, say, a maximum of 2 terms.
The key event risk for a minority shareholder of Yes Bank has played out. The upside gets capped, the downside opens, uncertainty is there, volatility is going to make a comeback. This is a stock which is overowned by institutional investors. Can there be a panic?
No, most definitely, because in the case of Yes Bank, the succession issue is even more complex and even more uncertain and therefore even more risky. Now, the problem in Yes Bank has been that both the Indian promoters, which is Rana Kapoor and the successors of Ashok Kapoor, have not agreed on any major issue till now. So without that joint concession, without the joint recommendation, the only other option is either for the promoters individually to reduce their stake to below 10%, in which case they cease to be promoters, which again is a highly unlikely outcome. Or third, and the most likely outcome under these circumstances, is whether the director, the CEO can be picked from within the current board of directors.